Today, Binance says it's ending support for its BUSD stablecoin next month. Deputy Treasury Secretary Wally Adeyemo pushes for lawmakers to grant the department extended powers to go after illicit actors in the crypto space. And Marco Santori, Kraken's chief legal officer, addresses the recent lawsuit the SEC filed against the crypto exchange. Welcome to CNBC's Crypto World. I'm Tanea McKeel at the Blockchain Association's 2023 Policy Summit here in Washington, D.C. We'll talk more about this crypto conference in just a bit, but first let's take a look at prices. Cryptocurrencies pretty flat this morning. As of noon Eastern, Bitcoin dipped slightly, trading around $37,700. That's according to Coinmetrics. Ether inched higher by about 0.5%, and Binance's BNB token traded flat at around $227. Let's talk about the top stories. Binance says it will end support for its BUSD stablecoin in about 2 weeks. In a blog post yesterday, Binance said users will still be able to redeem their BUSD through at least February of next year. Binance added that BUSD withdrawals would be disabled on December 31st, and any remaining balances will then be automatically converted to FDUSD. This comes about 3 months after the crypto exchange's announcement that it would gradually cease support for its stablecoin after Paxos, the company that issued the coin, was ordered to stop minting it earlier this year. Next, bankrupt crypto lender Celsius is opening withdrawals to select users. In a post on X yesterday, the company announced that additional withdrawals for eligible custody users are now available, but said other crypto is still not eligible. In a follow-up post, Celsius urged users to withdraw the eligible assets immediately from its app, as it would only be available for a limited time. According to a court filing this week, those eligible assets can be withdrawn until the end of February. Earlier this month, a separate court filing revealed that Celsius, which was once valued at $3 billion, plans to focus only on Bitcoin mining due to skepticism from U.S. regulators of other planned business lines. Finally, let's talk more about the Blockchain Association's Policy Summit here in D.C. Deputy Secretary of the Treasury Wally Adeyemo delivered a speech here yesterday where he outlined what he called a set of common sense recommendations to expand the department's authorities and broaden its resources to go after illicit actors in the digital asset space, including those outside America's borders. Yesterday, Adeyemo lobbied senior members of Congress with the proposal, noting that terrorist groups like Hamas use virtual methods to move, store, and hide their funding streams. According to the proposal, Congress should grant the Treasury new sanctions tools targeted towards actors in the digital asset ecosystem that allow terrorist groups and other illegal entities to move assets. Another government request is for special jurisdiction over non-U.S. stablecoin issuers like Tether. Yesterday, Adeyemo aimed some of his attention on dollar-backed stablecoins, saying providers outside the U.S. should not have the privilege of using our currency without the responsibility of putting in place procedures to prevent terrorists from abusing their platforms. This morning at this conference, we heard from several lawmakers, including Majority Whip Tom Emmer and Congressman Richie Torres, as well as New York State Department of Financial Services Superintendent Adrian Harris and SEC Commissioner Hester Peirce. All right, turning to the SEC's approach of regulation by enforcement for our main story. Last week, the agency charged the crypto exchange Kraken with allegedly operating as a securities exchange, broker-dealer, and clearing agency without registering with the regulator. Kraken's also accused of commingling customer money with its own and paying operational expenses from customer accounts. I spoke with the crypto exchange's chief legal officer here in D.C. about the recent SEC enforcement action. Last week, the SEC filed a complaint against Kraken, alleging that it operates as an unregistered security exchange, broker, and clearinghouse. This is the second time the SEC has filed a complaint against the company this year. Tell me about it.
Yeah, so the SEC alleges that that Kraken is a exchange, clearinghouse, and broker-dealer for investment contracts. None of those things exist. There's no such thing as a broker-dealer for investment contracts, or an exchange for investment contracts, or a clearinghouse for investment contracts. It's entirely hollow, made up by the agency. And so we disagree, as you can imagine. We plan to fight the complaint. We look forward to telling our side of the story soon. We'll respond to the complaint. But maybe more importantly, we think it's bad for policy for the United States. From a global level, and Kraken is a global company, we're seeing countries all around the world put together fit-for-purpose regulatory frameworks for digital asset companies, for exchanges like ours, that take into account the unique risks, the unique mitigators, all of the elements that you should be taking into account when you when you create new law to regulate a new industry. U.S. hasn't done that. Thankfully, there are those in Congress who are working hard at that, and we applaud the effort. We're not sitting here saying, don't regulate us, don't let the laws apply to us. That's not what we're saying at all. We are asking for a regulatory framework that makes sense for the crypto ecosystem, for users, for the people that use Kraken.
Obviously, you can only tell us what you can tell us, but what kind of do those next steps look like? Is there a general trajectory for a case like this, or is it kind of on a case-by-case basis? Regulation and enforcement actions in crypto they really have been top of mind, and I think it's kind of all coming to a point heading into 2024. So how do you expect to see this play out?
Well, we think by and large it already has played out. This played out in the Southern District of New York in...
Well, your fight against the SEC, Kraken's fight against the SEC.
Yeah, absolutely. That's just what I'm saying. We think that by and large this story has already been told in the Ripple case. Judge Torres in the Southern District of New York, a highly influential court in the United States, already ruled that these transactions, these on-exchange transactions, should not be considered securities transactions. We agree with that decision. It was a sound one. At this point, the SEC has had a chance to tell its story in a complaint that it filed in another district in California. Kraken looks forward to being able to tell its side of the story very soon. As these things tend to play out, there'll probably be some time, maybe a few months before we're able to do that. But we look forward to it, and we do intend to fight back.
You seem very cool about it. What's a top concern regarding the SEC lawsuits? I mean, the SEC's not been doing well this year in lawsuits with crypto companies. It's generally been a very positive year, and markets have not reacted negatively to lawsuits like this. What is your top concern?
Yeah, right now my top concern is for good policy in the industry. What we're seeing today, Congress has called regulation by enforcement. And that's because Congress has taken great strides to put new law on the books, but good policy takes time. And one of the chief complaints of those working in Congress to put new laws on the books is that there's a federal regulator out there who is taking advantage of a lack of law on the books and trying to push through novel legal theories. Kraken disagrees with those theories, and we intend to dispute them vigorously.
So how long does it stay like that? It seems, there's still a lot of uncertainty regarding regulation in crypto, but it also seems like it's come a really long way from 2013. It's nice to see regulators be engaged and have back and forth conversations with companies. So where's this all going in 2024? There are two main pieces of legislation around stablecoins and market structure. But there is also the regulation by enforcement. It's an election year. There's kind of a lot at play here. So it's been progressing. What exactly do you expect to see happen with regulation next year? Well,
I think you said it. You said that the market has largely shrugged off some of this lack of clarity. I like to see that. I certainly like to see confidence in digital assets, despite what we view as a transient situation here in the United States with regard to law. There is still very little law on the books with regard to digital assets. I really do hope that we can get meaningful congressional action soon. I think that's the best way to prevent another FTX. It's the best way to ensure that good actors are operating onshore here in the United States, where they can work hand in hand with regulators to protect their users.
Are you confident we'll see legislation in 2024?
I think you probably don't want to ask the lawyer what Congress is going to do, right? We always seem to have crazy opinions about it. But I will say that I know that Congress is hard at work on this. We've met with some members today, and we'll do the same thing throughout the week here at this as part of this conference. But I know that those who are working toward clarity, toward laws that are fit for purpose, are dedicated to it. I have great faith in those people. The question is time. Will time be on their side? Will we be able to get clarity from Congress before we get it from the courts? We're in a situation in the United States where, thanks to our separation of powers here, which is a good thing. It's why we have a constitution. Thanks to that separation of powers, we don't have a unitary government that simply goes off and does what it wants. Right? We have a government that is that works by way of checks and balances, and we have courts that are primed now to rule on these issues. We just got our very first ruling on these issues in the Ripple case. And as I said, I think it was well reasoned. I think most of it was level-headed, and we think other courts are going to see it the other courts are going to see it the same way. So really, the question is not will Congress act. The question is, will Congress act before the courts moot the issue?
Santori also reacted to that massive legal settlement for Binance and what he's watching for crypto regulation around the world. You'll be able to check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow with more content from this conference, including an interview with Grayscale's Chief Legal Officer, and we look forward to seeing you then.